Fed's balance sheet chart doing its roller coaster impersonation. We went from the good times to repo market blowout to pandemic to raging inflation and then on to QT number 2. It's important because it shows the Fed's been basically playing firefighter, putting out one blaze after another by throwing money at the problem. The reason it's not headlining is because everyone wants to believe they can just keep shrinking the balance sheet without any pain, but history says otherwise. Then we had silver lease rate spiking, which is basically the market saying, we're running out of physical dilver and everyone's panicking to get the real stuff. It's not in the headlines because it's a bit of a niche corner of the market, but it's a sign of tightening supply. And then we had that drop in federal government employment at the fastest pace since the Korean War, which is kind of like the government saying we're tightening our belts. But nobody really wants to talk about it because it doesn't fit that everything's fine narrative. So all in all, this second set is the deeper layer of the cake. The stuff that's bubbling under the surface that people aren't talking about every day, but it's super important because it's telling us where the cracks are falling. And that's why we're here, to point out the cracks with a little humor and make sure the bag brigade knows what's up.